right. So while we're waiting to see if this is just a half cycle low in gold, and if it's going to recover and then go on to test 2,000 again, in the meantime, we've got our daily cycle low in stocks, and I watch this happen every time. We're in the timing band for a cycle low, and then we get this little undercut here, and I see a lot of people panic, and they stop out of positions. I don't generally recommend stopping out of positions when you're 35 or days or longer into a daily cycle, because it can often just cause you to whipsaw, and that's what happened to some people here. They got whipsawed by this little marginal undercut. So um, the odds are really high that we've completed this daily cycle low. It retraced about 50% of this rally, which is about normal. So far, the market is still behaving as if it is in the advancing phase of an intermediate cycle. By that I mean prices bounced pretty quickly from this oversold condition. It didn't embed in the oversold condition, which is what tends to happen like this. You get this kind of look when you're in the declining phase of an intermediate cycle. Traders just continue to sell even when the market is oversold. But that's not happening here. We've bounced quickly from that oversold condition, and now we're heading back towards overbought. And I expect we'll probably embed in the overbought condition again, just like we did here. Um, and at the very least, I think the market's going to continue higher into the FOMC meeting. The Fed wants to cut, I think, 50 basis points is what the market is predicting, and that's just going to be really hard to do if the market is in decline. So they're going to continue to pump liquidity into the market, and I suspect we're going to make a higher high. And like I've been saying for a while, I think even if we're going to start a bear market, big money will almost always give themselves an out, and that usually means they have to create a marginal breakout, and they'll sell into that breakout, and then the market can roll over and start down into the bear market in earnest. Um, but as of right now, anyway, all the signs are pointing to this being a final um, daily cycle low, and then we're probably going to rally for um, several weeks, and maybe we come back up to test these all-time highs, and then at that point, then I would become very nervous again, um, and I don't really think we're going to break out and run for, I don't think we're going to get another sustained uh, breakout once we do test these highs. I think the market is just it's too stretched above the long-term 200-week moving average, and probably the best we're going to be able to hope for this year is a very erratic and choppy sideways market that's very difficult to trade successfully and make money. But we did manage to catch this bottom and make some money off this run. I didn't get the exact bottom. I missed it by 3 days, but still close enough to where we made some money here. And then we got out um, pretty close to the top here, and now we're back in at the bottom, and we're going to hold for a little bit um, uh, as this rally continues to move. And in the meantime, I'm watching the metals closely to try and determine whether or not um, the cartel has succeeded in stopping the gold rally with that attack at 2000, or whether gold and silver are just moving down into a half cycle low that will be recovered quickly once it gets oversold, and then we'll go up and test 2000 again. My bias is slightly to the latter scenario, but I'm I told my subscribers a couple days ago on Monday, when I saw that exhaustion candle on GDX, that I was going to go ahead and take profits on those positions just in case. That attack at 2000 was um, it was somewhat of a red flag. The cartel is or the Fed is trying to fight inflation, and they're just not going to be able to, they're not going to have any credibility at all if gold is above 2000. So they're going to fight tooth and nail to try and prevent gold from getting above 2000. And when we had that huge attack, the other day, that was a warning sign that, you know, take profits. We had a really good move in the metals, so I'm going to take profits there. I'm still, like I said, I'm still slightly biased that this is going to be a half cycle low, and that will recover and make another run towards those all-time highs, and that might open the door for silver to get to $30. But as I said in my last video, it needs to do it quickly. If it doesn't do it quickly, then the odds are it's not going to do it. And so, you know, right now we're kind of at an inflection point. Metals need to recover quickly. This needs to just be a half cycle low, and then they need to get moving again to the upside. If not, then I'm just going to continue to stay on the sidelines.